This week we're talking about investing. So we'll start off by talking about why we invest and what's in it for us if we do choose to invest. In order to do that, let's first differentiate between investing and speculating. Investing is typically long-term, where we're taking on what's called a buy and hold strategy, where we're expecting the future value and the return of our investments to increase over time. Whereas speculating is typically short-term. We're trying to take advantage of maybe some mispricing or some other temporary phenomenon that we see in the market. So before we get into investing, because it's so long-term, we need to make sure that our bases are covered first. We've got adequate insurance, we have enough savings and maybe an emergency fund to cover any type of emergency or unexpected event. So how do we get started? Well, one way to get started with investing is just to earmark a certain amount of your earnings each period for investing. So you can have that done automatically, and that's what makes it a habit. So you could take advantage of some automatic investing and or dividend reinvestment programs to get your portfolio started and maintain that portfolio. Before you start investing real money, though, you may want to what we call paper trade, where you pick the stocks or mutual funds or whatever it is that you would buy and just write it out on paper showing what you would have paid for it, and then watch it over time and see if those would have been good choices. You can do that on paper, or you can actually do that in Yahoo Finance. Yahoo will let you create a portfolio at no cost. And then you also want to figure out, what are your objectives? Are you saving for retirement? Are you saving for some other long-term goal? Because those objectives and the timeline associated with those objectives will be really helpful in determining what investment vehicles you should choose. So some examples of objectives: current income. Maybe you're already retired and you're looking to get regular income, maybe from interest payments on bonds. Major expenditures. You're preparing to make a huge purchase and you've got some time, so not in the next year, but more than a year from now, and you want to be more aggressive in putting money aside for that goal. Or maybe it is for retirement, and that retirement is a little bit further off in the distance. Or lastly, you need some sort of a tax shelter. So how do you come up with the cash? Well, we already talked about having a regular portion of your earnings allocated towards investing, but maybe you have a lump sum, maybe you got a windfall, lottery winnings, inheritance, something like that. That's something that you could use towards your investment goals. So different ways you can invest, or things that you can invest in: stock, bonds, preferred stock, securities that are convertible from one type to another, maybe a bond that's convertible into stock. Something that doesn't require as much management from the investor would be a mutual fund or an exchange traded fund. And then of course there's real estate. So we're going to pause for a moment, and then we'll go back into each one of those investment options individually.